This is a quick post-market analysis of 4th of June. The market have again recovered 200 points from its intraday low, but don't get fooled. This is a third straight trading session that Nifty opened gap down, fell more than 200 points and recovered more than 200 points. And most of the traders are calling this as strength and opportunity and the bottom out and everything. But I won't say that. The reason is today the market got a major positive trigger. There are reports which are suggesting that the government may reduce or even remove the taxes on interest which is earned by foreign investors investing in Indian government securities. So the market loved this news definitely. So Nifty immediately recovered from the morning crash. But then something interesting happened. Despite such positive news, the market couldn't sustain a strong rally. In fact, it got rejected at yesterday's high. In fact, it fell nearly 150 points again before recovering into the close, which is almost at yesterday's high. And after all that drama, Nifty closed barely 10 points higher. That tells me one thing, that the market is defending the support, but it is not showing the real bullish strength. The strength is missing, and the biggest warning sign is for the eighth consecutive session, Nifty failed to close above the previous day's high. So that's a classic lower high structure if you look at the technicals and the patterns. And that's a sign that the sellers are still active and still strong. Now look at FIIs. Even after all the positive news, FII still sold 4,500 crore today. Day after day, they continue to sell. So when the traders are celebrating every recovery, last 3 days what we have seen, the institutional money is still heading for the exit. But what's the good news? Still that 23,200 and 23,300, that remains a very strong support zone. So the market have defended this area repeatedly yesterday, day before yesterday and today. So what's the bad news? Until Nifty starts closing above the previous day's high and breaks that 23,500 convincingly and decisively, this is still a weak market and not a bullish market. So my view is the market is definitely not trending. It is trapped. It is consolidation, right? 23,000 to 24,000 remains the battlefield at this point of time. And in this environment, capital protection is more important than making any kind of prediction. So that's it about this post-market analysis. If you would like to join our live market mentoring session, get in touch with us. I see you there.